Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The markets were relatively whipsawed overnight after the economic data released out of the US showed manufacturing sector contracted for the fourth consecutive month in February as higher interest rates continue to weigh on demand. The Institute of Supply Management survey said its index tracking factory activity was around 47.7 last month, which was higher than 47.4 in January. The index fell below the threshold of 50 into contraction territory for the first time in 2.5 years in November, as higher borrowing costs slowed demand. Furthermore, fueling concerns about US interest rates, Minneapolis Federal Reserve President Neil Kashkari said Wednesday that he's open to the possibilities of a larger interest rate increase at this month's policy meeting, whether it's 25 or 50 base points, but hasn't made up his mind as of yet. This caused a bit of a stir in the markets, and as we can see, the Australian dollar is attempting to regain momentum towards its resistance level of 67.65, even though the dollar index, which measures the greenback strength against a basket of 6 major currencies, is slightly to around 104.30 from 104.60 overnight. An engulfing candle now awaits confirmation, and that confirmation would be a break of 68.10. If seen, would reinstate the upside and give us a target up towards the 60-day moving average, which is seen roughly around 68, 65, 70, and furthermore, maybe even back towards the highs around 69. Still, there's a lot of work to be done to support this case, as the dollar index is still vulnerable for a rebound, and the technicals haven't quite cleared the midway point on the RSI. So let's see how we plan out today. We're very close towards this level of 68.65, but a New York close, and along with that, we do need to see a break above 68.10 to support the bullish case. Looking at the euro, we can see the market has stormed higher after taking out the level of 106.40 and now presents itself to the challenge around 107.0515. A key point, as we can see back in late January to early February, this market did challenge this region and struggled to clear after many stabs. So I feel the bulls might be getting a little bit ahead of themselves and maybe coming into an ambush from the bears that could send the market back towards the bottom side around 105.20.25. Still maintaining a relatively firm case for dollar yen. I feel the market will eventually take on the challenge towards 136.70 and higher. In light of the pattern, though, we are a little bit overbought, but still coasting sideways, but holding to a bullish case. But the ADX is not trending at the moment and actually holding to a ranging market. Let's see how this Dragonfly Doji plays, and if so, the bulls may actually take the market in towards 137 as expected. Sterling, well, a little bit mixed overnight after the market took the challenge towards that 119.60 area and rejected, but not quite out of the zone to support another bear case into today, and therefore may see the market challenge this level once again around 119.60-65. A break here would give further scope down towards 118, but I would like to see a strong break to support the bear case. Otherwise, we will likely continue idling in this range of 119.60 to 121.5. Seems that gold is finding a little bit more momentum after clearing the resistance of 1,832 to 33, but struggling. I feel that the market may actually return to a disappointing outlook and eventually see a pullback towards the region of 1,800 and the objective holding at 1,786.29. And wrapping up with oil, the market's edging slightly higher, as we can see here, looking towards its current target around $78.70.90. A rejection is anticipated from this region, well, that could send the market back towards the region of 74.70.90. Well, that wraps it for the start of the day. Thank you very much for joining me, and as always, grab the interest rate report. I hope you enjoy the morning.